Prepare to experience a trading edge like no other with the 369 Forecast Rotational Market Oscillator. This isn't just another indicator, it's a truly unique money printing OSC designed to give you an unparalleled insight into the market's core buyer and seller sentiment. Imagine having the power to see through the market noise, tracking the true emotional pulse on daily and weekly charts across any stock or future, setting you up for massive positional trading opportunities. This oscillator reveals those critical moments for big moves, and none is more exhilarating than when the bottom OSC line aggressively injects deep into the upper boundary. This rare signal is the market's way of showing that retail traders are being decisively trapped, creating the perfect slingshot moment for professional traders like you to confidently take a long position and ride the impending surge. Get ready to identify these high probability setups and potentially unlock significant profit with the 369 Forecast Rotational Market Oscillator, your unique key to identifying money printing opportunities.
Welcome traders. At level 0, we are going to demonstrate some ideas in your package. You also are going to be building long-term wealth. This is a weekly chart. So once we know the critical levels of weekly chart for market makers, we can always go down to like daily basis, because these weekly charts are the positional trading opportunity. Then we can go down to hourly charts, and you can see how these things are. Once we know this in advance, how things are rotating. These are the true rotational market sentiments which you can trade. Now when the earnings are coming, you know these levels. You know these levels. And what we can do with this is trade at this level, like 300 to 84, they are ranges because we offer market maker ranges. So market is right now here. It can go down to like 170 to 183 range. It can just rally up around 300 to 286. They're pretty, and then it can retest also here on 203 range. So depending on the earning, and the rotation can start at, they may dip it and go up, but knowing these levels is the first priority. Now this is coming from weekly chart, and market is holding at these levels. All right, so if you're building some other scenarios, we can do it very simply just by looking at the market maker models, which are going to be part of level 1. This is where we start from, called C54. At level 0, we are helping you in a different, easy way. And this is the oscillation at the bottom, and this is on a weekly chart. If you want to build long-term wealth, right, you got to trade weekly charts. You're gonna get into the habit of trading precisely when the opportunity is there, when the pain is max injected into the retail soul, right? This is the business. It's a hardcore business, and I'm not gonna sugarcoat this. That's how it is, right? It's $1 trillion worth funds and you. So who is going to win? Well, they have the volume, they have the hammer, but what you have is the agility and reactional oscillator. Whatever they're doing, and the public is getting excited about the extremes on both sides, positive excitement versus negative excitement. Public release their stocks here just to realize later. When market goes here, they say we are missing the boat. It's going to 1,000. So what happens? It comes down, right? So how do you effectively build long-term wealth? In 10, 20 years, you are worth millions and millions. And you track, maybe you take your portfolio of 6, 7, not more than, you don't want 20 different diversification. You have to just get to 4 of these is good. So you must understand that fundamental analysis. There's the bankers from Switzerland and the big, huge money wealth, people who own money, 8th generation who own money. What does that mean? Well, they run the show. There are 8 families who are running the show, right? So they wrote a book also. Zurich, I think I did mention that earlier. I will highly suggest you go to Amazon and read that. Zurich Axioms. All right, it is a very skinny book. You get the message. You can't diversify across 100 funds. You as an independent trader, you find, let's say, 6 opportunities and you keep feeding those opportunities. So this is the opportunity feeder for multi-generation. If you find those 6 things you want to, the 6 pillars you want to invest generation after generation. And once you get rid of one pillar, you replace it. You don't want to go across 60 things or 20 things. You have ETFs for that. All right. So that is something you can think how you want to tactically trade, or you just want to be a rotational trader. So this is the reason this is called rotational oscillator. And we're putting it on Tesla weekly chart. Why is that? This is designed for long-term holds. You want to capture the entire yearly swings. All right, so in the bottom is the tracker for the retail market. And when this goes, there are yellow lines on the top and there are 2 at the bottom. So when this bottom oscillator jams inside right here on the top yellow line, right here, what are we doing? We are looking to buy. Panic is set in. Remember, we are building position on a weekly chart. We are not going to go in panic. All right, this is holding long-term best opportunities to buy. You'll get 1 or 2 opportunities a year. So if you look at this 1, 2, 3, 4 years with all the splits and everything else, you got 5 opportunities, 4 opportunities. Rest is tactical trading. How do you get in? How do you get out? And what we need, the best trades are when they both collide together. When the top is at the bottom and bottom is inside jamming this is not a good trade. Why? This is not at the bottom. But if you go here, it doesn't matter. You just buy in here. All right, add more. So this is where you combine 2 things together. The top and bottom same pattern showed up here. So when you're looking at, see, this one was not as close as this guy, right? On the bottom one, it is resting, is basically resting, head and shoulders, right? All right, there we go. But if you're acquiring wealth, you buy more. If you bought 1,000 here, you bought 1,000 here, your average price is here. And this is how you double your wealth, right? And keep building more portfolio. So how do we hedge it? How do we keep on holding without losing things, right? This is where the bottom comes into picture. All right, this is simple as that. It is inverse oscillator for a reason. This is where when it gets to the bottom, I'm hedging. So what do? We go here and we buy some puts. And puts are cheaper. Why? Because market is going parabolic. Puts are so cheap, you hedge it. You had it 1 year out. Comes down. All the money you made from the puts. Now you bought something here, your stocks are down, but your puts have given you so much money, you just buy more. You see what's going on here. You buy more. So you have 1,000 shares here, you buy 1,000 more. And average is here. So you got, if you had just bought it and just left it alone, you'll be down. You're adding more. Here, you are not only adding more, but you're adding for free. So you bought 1,000 shares and you got all this profit and you bought 1,000 for free. Whatever money this makes you, you bought more. All right, so this is how you accumulate free wealth long term. Same thing happens here, right? It goes up, you hedge it. You have to do more analysis, but just to get started, you hedge it. what happens on this hedge? Same thing. When it comes down, you make money from the hedges. Now you bought it here. You started buying somewhere here, right? The stock market has not gone anywhere because you got some splits. Maybe you got 1,000 and now it is 2,000. Now it is 3,000. You end up having 5-10,000 shares with 10 years rotational metrics if you do play it right. And we know in advance which years are going to be highs and lows, which months are going to be highs and lows. We know based on tactical moves. Here it is again, parabolic move. This is just happening today. Today means this year. Right here, hedge it. So you started here, you ended up the same place. If you just look at the stock, yeah, you got some two splits here, right? 1 to 4, 1 to 5 splits, that's fine, but your positional trade is still the same. The value is still the same. You got some, all right. So anyway, by doing this rotational moves and hedging, or maybe hedging from here and hedging from here, all this money is reinvested into buying free shares. And this is how you can make this happen. And you just have to apply this strategy, and you can work with your broker, what you are telling him, what you want to get done, right? And then this oscillation also has upper bound limit, which is not plotted here, but you can just see. All right, so this is how you can take 6 stocks. You can do it with 7, 8, 10 stocks, and you can do it with ETFs. It doesn't matter. And then you can keep on building your commitment towards multi-generational wealth. This is also now part of Level 0 Startup Kit. So you can engage yourself, not having to miss the opportunities which are passing you by as life floats away. Thank you.